Hi and welcome to the Investing Chartered Accountant. This video is going to pick up on the sales that I did last month, and this is predominantly to trim my position. So just to take some profit, just to put it into the bank, and I didn't exit any of these positions, but I'll talk about each one. So the first thing I did in October was come and sell 20% out of Greggs, so about a third of my position. Now I've done quite a bit on Greggs, and I'm going to do another video talking around the Greggs current price, but I decided now was the time just to reduce the position because it remains the largest one in my portfolio currently. And at the stage before I sold the 20 shares in October, it was significantly the biggest in my portfolio, so it was time to redress. And I think you hold and you sell shares for about three reasons. One, you just have no confidence in the company, and that's not the case here. Two is because your reason behind buying the share has gone. Or three, you need a very quick exit. Now for me it's definitely two. Which is I bought additional Greggs shares to get my average price down. So I just DCA'd down, and it's just got to a point where I need to get the investment out of Greggs to go into other companies that I've got my eye on, which is pretty much what I've done with the sale money. It's been reinvested, and I'll do another video on what I've bought, and I've bought quite a bit in October. And to be fair, I bought a little bit in November, but that's for another video. So I've taken a gross profit of just over £6, and the reason I'm not including fees is because the fees I offset with my cash balance interest. I'm lucky enough to have a balance interest at the moment, so I offset all fees using that. And I don't include dividends because the dividends get reinvested, so it would just be, in my opinion, a false position. So I just show what I bought it for, what I sold it for, and that's the gross profit. So the gross profit here of £6 is quite a low return. I'm sort of setting a 6% return minimum. So definitely, you can see from Greggs, I've accepted a lower return. And to be fair, I just, like I say, the reason why is I wanted to release the capital that was used just to get my average down. But as you can see, I've still got 40 shares left, so it's still quite a material position on my portfolio as it stands. Okay, I've also sold out 4 Starbucks shares. Not the first time, I sort of dip in and out of Starbucks. But a 5.4% gross return is getting closer to that 6%. So I've halved my position. I can see myself selling more Starbucks shares. It's just when I look at Starbucks, I look at what's going on in the States with the increased cost of imports due to the tariffs. Doesn't matter what Donald Trump says, that gets passed on to the customer. Customer is paying more because of the tariffs, and therefore it's causing a bit of strain within Starbucks profitability. And with their shake-up and reorganisation they announced a few weeks ago, I think I might just need to dip out and see how it flows moving forward. But as you can see, I've still got a very small position being held there, and I'm just going to see whether I sell this month or not. I've also got a good position in Pets at Home. As you can see, I've only sold out 150, so I've still got 250 shares, so it's still a material position. Believe in Pets at Home. I think it was undervalued when the second profit warning came out. I think there's a big overreaction in the market. I took full advantage and bought at a really good price. You know, my average is below £2 per share. That's a really good price for what is a very strong UK pet-focused business. Very happy with Pets at Home. Might trim it further by another 50. We'll have to wait and see. But, you know, that's a good profit. And over 8% return, very happy with Pets at Home. And once again, the reason is very similar to what I did with Greggs, which is I saw the price fall, I bought in quite a bit, and now it was just about selling at a profit and releasing the capital, because I never intended to hold for, circa 400 shares in Pets at Home. That was never my intention. So I'm quite happy with its position at the moment in the portfolio, though it might need additional trimming. Amazon, I might have sold this too early. Over a 10% return is brilliant. Amazon's been dragging along the bottom. It's had two big uplifts in the share price, dipped back a bit over the last week, and at the time of recording, it's the Sunday the 9th of November, so the market is falling a bit, but Amazon sort of week on week is still in a pretty strong position. I just thought I'd just take a bit of profit. I've still got the one share left, probably should have held that to two, but end of the day, profit is a profit, and you've got to be in it to ensure that you end up in a better position than you started, and that's very much the case here. So, I sold to take the money. And Sophie is the other one, or Sophie, depends how you pronounce it. I bought and sold. So I sold 5 and bought the 5 back at a lower price. So I think I sold around $29, I think it was, and I've bought back at $26. So I'm very happy with my average. My average is just above $26. So I still, sold the 5, bought the 5 back at a lower price, and turned around almost a 15% profit. So, beautiful. Love the stock. I think it is going to rise. I think it's already broke the $30. It sort of sneaked into 31. It's dropped back. I think there's a lot more confidence more broadly with people holding Sophie, and I can see this stock going from strength to strength, just depending on the American economy. It's always, do fear for the American economy at the moment, and anything like that will have an impact on Sophie's performance. So when I take it in total, you can see I've made, doesn't look a lot of money, but on my portfolio, that's a good return. Like I say, my target is 6%. I've made 6.6. To me, that's a really healthy position to be in. That £1,276, all intents and purposes, has been reinvested, and I will issue a video showing my investments in the next one. So hopefully that was useful. Like I say, a 6% return is what I target. Doesn't mean what you do. None of this should mean you should rush out and buy or sell any of these shares. Just what I've done on my portfolio in the month of October. So if you like it and you want to follow my journey is trying to get to a portfolio size that ends up growing. It's still small. It's still 5 figures now. It's just gone over 11,000, and I started in June, so I'm still a relatively novice investor. So if you want to follow my journey, please subscribe. And if you feel inclined to, give me a like. It all helps and all keeps me motivated. So until the next video, happy investing and fingers crossed.